Happy Monday, traders. It's 8 a.m. Chicago time. Woohoo! We're starting on time today. On Monday, the 4th of March, 2019. Thanks for joining me this morning. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on. Gold is the only laggard this morning. Well, not the only, but major asset. Gold is back down below 1,300, trading at $1,287.90, down 0.88%. The volatility index is also off by 13 cents or 0.84%. The leader today is crude oil. April crude is trading at $56.50, up 70 cents. And that's 1.22%. The NASDAQ is the leader this morning in the indices, 43 points, up 0.6, trading almost at 7,200 again. And the Euro Stoxx 50 follows that, then the Dow, then the S&P, then the DAX. Interestingly, the Bund is higher by 35 ticks this morning. And the bonds are up 3 ticks, with the Treasury notes are being up 1 full tick, or two futures ticks, or 3 futures ticks. You would expect those 3 products to be off today. You expect allocation to go from those products into the indices as risk is on. The major driver this morning, as far as I can tell, but who the heck knows? I'm not a conspiracy theorist, but we rarely ever really know what's going on in the inner works of this engine. But the biggest thing is that there's a lot of optimism over the fact that the U.S. and China have come to some sort of an agreement, which takes $200 billion worth of tariffs or tariffs on $200 billion off the table on both sides. So China's backing off, and so is the U.S., and that there's a potential of a Xi-Trump meeting later in the month. Also, optimism out of the U.K. Parliament as it moves towards supporting the Prime Minister's Brexit plan. So there's some good news there. And there were a whole bunch of numbers released. Let's take a look at the calendar real quick. This morning, we do get the construction spending at 10 o'clock Eastern, 9 Central, expecting 0.2, which is lower than the 0.8 prior. That's the expectation. And then in the evening, we get the composite PMI out of China. That's moved us around in the past a little bit. And then, of course, the National People's Congress in China is a key event for that, for the world's second largest economy. Let's take a look at what we expected on. Wait a minute. What's happened here? Oh, it looks like I closed it. All right. Hang on. Give me a second. I closed the page with the Friday Trader Bite as I'm racing through things. I'm just going to put it up in a second here. I was going to say get it up, but I didn't want a bunch of trader jokes about that. All right. Here we go. So here's the review segment. The primary scenario on Friday is that we're likely to chop around on an open auction out of range inside of the balance that we've been in for a while. And we're trading in Tuesday's range. I expected a gap zone to remain open, and then I expected it to turn up and push into the 29.15 area in the session. And the secondary was a push towards 28.05, 28.06. to find resistance and then to rotate down. I expected it to go as high as 28.09, the point of control here. And then I expected it to turn around, push towards 27.94.95, another key area, and then to move down into the 27.90 area or so. Friday looked a heck of a lot like scenario 2. Here it is. We stopped just short. So remember the key prices are 28.05.06, 28.09. Up above 28.14.15, down below 27.95, and then below that 27.90 was the expected target for scenario 2. Scenario 2 pushed up, missed by 3 ticks, the upper boundary at 28.09, and then pushed back towards 28.05. We had look at the IB low is right in that area, 27.95. Remember that number from back here. 27.95 kind of plays for a while last week. 27.95 gets a small bounce, as you see here, and then it pushes right through and gets back into 27.90 and drops right into 27.87.75, closing the point of control of the prior session, and then starts to walk itself to the mid. At the mid, we have VWAP, mid, and a low volume node. At the time, we did pull back to this area before the mid was even formed. Hang on one second. Before the mid was even formed, and then we come back here, and it just looks beautiful, right? It looks like, hey, we've got some confluence. The time of day is not very favorable to this trade, but in either case, we do have somewhat of a drive down, and we're pulling back to the mid. That's a valid trade for me, at least, and I'm looking for at least a minimum scale out of 3 points, and it does yield that before it pops right back to the open, these green dotted lines. That's the open of the session, so we're respecting day type levels. Short time frame traders likely to be in control here, and then we just oscillate there, giving us a point of control that's inside of the IB, right up against the open at 28.04, 28.05. Again, playing in this area. 28.05 is kind of something you really should be aware of. So that's how we finish up on Friday. We did have a fairly weak high. The low had a bit of an excess in it, but it traded a fair amount down there, but it did have a bit of an excess in it. And this push-up tells us that the attempt to fall into the prior 2 days balance zone to accept those prices in those areas was rejected. Buyers stepped in and took control and pushed it all the way back up. The Russell ended up going neutral. Now, you see this pop here. So if we draw, let me just show you what time. No, that's not what I wanted to draw. If I show you the time, this was this bar closed at 1:30 p.m. Chicago time. And you look at the Russell, which was way ahead of the game. And look at the Russell. The Russell beat its mid and went back to the open at the close of this bar here at 11:30. At 11:30, just 2 hours ahead, the Russell ended up putting in a neutral day, breaking below and above. Again, I'm closely watching the Russell and feeling the Russell out just to get back into that product again. But the Russell had no mercy for the sellers here. It blew right through its mid VWAP, and it had a low and a high in this area earlier in this morning and in that morning, and it just blew right through. And it did so on continuously falling delta, unbelievably. So there was a strong drive up there. It seemed like sellers were backing off in the Russell, and at 4 It front ran what the ES did. The ES ran back, as I said, at about 1:30 Central. Did not go neutral on the day. We've had several neutral days in a row. We've had neutral here, neutral here. This is a normal day right here. We extended the range by just a little bit. This is neutral, and then this is also a normal to normal variation day, or a variation of a normal day. But we did finish with a weak high and the point of control right up near the highs, although inside of the IB. I saw some better opportunity on Friday than the prior days. The range expanded quite a bit. But still, I find it to be a tougher read. It seems like the market is responding to kind of global macro type of movement, and is resting right after it breaks. It tends to rest. Here's last night. Last night we open. It's a 5 o'clock open here in Chicago. We open in a gap. We gap up into 28.14 from a high of 28.08. So we have about a 6-point gap. And then we just push immediately, pull back to the open, and then just go sideways throughout the Asian session. The Europeans come in right here, and then we drop a little bit, drop some more, almost back into the range, but we're holding steady. But look at this profile. The overnight profile was just completely Gaussian, completely balanced on okay volume, 149,000 contracts, a little lighter than what we've had lately, but well within what we would consider to be normal or one standard deviation. So where are we now? We have a VWAP, a mid, an open, and a VPOC all within 1 point of each other. And we're trading just above that. So completely balanced in an open auction, in an auction that is holding steady right in the value area of the overnight session. So what we're learning from the overnight session is once we popped on that news, this sentiment, this positive sentiment towards this trade war, the biggest risk to the market is the U.S.-Sino trade war. Once we see that they're backing off of these tariffs, the market takes that in, but then has nothing else to price in for the session. So that's where we are. That's the overnight. How do things look going forward? So let's take a look at the current indications. What are we expecting today? So we're trading at 28.1550. And we'll go over some of the key areas above and below. Boom. Green. Opening in an open auction against the high that was put in last week at about 28.14. Above us, we have 21.50. We have 22.50-ish. Let me take a look at that. 23.75. So it's 21.50, 23.75 is the prior swing highs. I believe the one is November 7th. Let me see what it is on the master levels. There it is. The swing high is at 21.50 from the 7th of November. And then the one above that's 23.75 from October. Those are both marked as stock zones as well. This is an open auction against the prior high. I expect an open auction to take place out of range. I'm expecting a pullback into the prior range, in towards the prior range. There's very little here to keep this from pushing lower. The mid of this, if it opens here, the mid of this is approximately 28.11, which is where I expect us to kind of hold steady. I'm looking for an impulse up, consolidates up against this overnight high, and then pushes into 21, and then breaks through that 23 area, and then comes back in and closes within the range of the day. It is a Monday with not much driving us today. Not expecting much news, expecting the range to be about 11 to 23, 12 points. That's quite normal. Okay. And the secondary scenario is an open auction out of range that drifts up, pushes into the high, gets up into the 21 area, breaks through, gets responsive, pulls us back, and then starts to walk itself back towards 2809. And then if it has any guts at all, it would push to 2805 and bring us back into that key price area down below. Okay. Scenario 3, even though we are in a gap, scenario 3 is really a sideways scenario. We test the overnight high, we pull back in, we push down into 2809 or so, and then just hold steady and sideways. I'm not going to draw that on here. That's a balanced scenario. The overall composite doesn't change much with Friday's action. We still have 2785 as the MC point of control. If we start to fall back into the range and we start to push lower into the range, then I'm looking again at 2795. So again, 2790 from bottom to top. Okay, key areas: 2790, 2795. Okay, 2800 century figure, again, just noise. 2805, key turning point support resistance area. 2809, and then 2814.15, which is the prior swing high. 2821 and a half, 2823.75. Those are the big areas that I intend to interact in, and where we're likely to see some volume come in and take positions and so on. Okay, so you gotta. That's the roadmap, and that's the goal here. The goal with these Trader Bites is to provide a view on what's expected and a bit of a roadmap as to where I'm likely to interact, or where the market's likely to go, and how I can interact with it. Hopefully you heard me loud and clear, and I'll catch you tomorrow. There was supposed to be some trade wisdom today about luck, but I'm going to skip that and let you go. It's 8:18 Chicago time already. I'm 3 minutes over. Good luck today, and if you have any comments, questions, or whatever, put them in the comments in YouTube, or shoot me a tweet at twitter.com/futurestrader71. Good luck.